Good afternoon and welcome to the latest episode of TaxCalc TV, defining your services under MTD. I'm Andy North, I'm the CMO here at TaxCalc, and I'm joined once again by our Director of Product Compliance, Dean Shepherd, and also our very special guest, Z Razak of Surtax. Z is the Managing Director of Surtax in St Albans. He's been in accounting for about 20 years now, including both industry and in practice. Currently, his current firm serves around 200 firms, and a lot of them are in the property sector. So he has a lot of experience, and that will something we'll be bringing up later. So why are we looking at the topic of defining your services? Our regular viewers will remember that about a month ago we unveiled the simple step guide to MTD Readiness. You may recall that we created this with the invaluable input of our crack team of small practice owners. There they are. Our brains trust of practices, which made sure that the advice that we were giving in the guide was grounded in reality and was genuinely actionable. And as you can see, Z was part of that team, which is why he's here today. And I want to thank him once again for showing up. So in the guide, we lay out a timeline-based plan. This is quite unique, that will walk you through all of the major decisions and the activities that you'll want to get to if your transition to MTD is going to be as smooth as you would ideally like. So after a great deal of deliberation, we determined that the first stage of anyone's journey towards MTD readiness should ideally be to determine exactly which services you're going to be offering and offering your clients. And that decision was pivotal, and it would inform all of the other decisions that you would need to make. Really, without being clear and certain about this step, you'll find that the questions that you need to answer and the decisions you need to make beyond that are going to be a lot tougher. So this one was really crucial. So we want to do a deep dive, and that's what we're going to be doing today, looking at the options that you have and the factors that you're probably going to want to be looking at if you're going to make that decision. So before we start, a little bit of very light housekeeping. Yes, obviously we will be sending you a copy of this recording immediately after the session. Yes, we love having your questions. We will try to get to as many as possible. We'll do that at the end. And if some come up during the actual session and they're relevant to what we're talking about, we may try and bring some of those in. If you do have a question for us, please post that in the Q&A box. We will see those, so no one else in the audience will see those questions, just us. If you do want to speak among yourselves, the chat function will do that. Now, that is not seen by us. So if you post something in the chat, it will be seen by everyone else who is watching, but not by us. So we will be unable to respond to that during the actual event. Without further ado, Dean, what is service definition, and why did we choose to put it at the first priority?
Okay, so I guess what we mean by service definition is just being crystal clear in your practice and amongst your team exactly what services you are going to provide to support your clients with MTD for ITSA when that finally comes to fruition. We could have started anywhere in terms of the guide and the strategies to pick off, but we did as a team feel that if you haven't got that nailed, then it can give you problems in rolling out the other strategies. From my own perspective, when I was in practice, when I first set up the practice, I made a strategic decision that I wasn't going to offer bookkeeping services to any of my clients, because at that time I didn't have the resources to do what I saw as quite a low profit margin job. So it wasn't until much later when I had a team and the technology to support me that I offered bookkeeping as a firm. Now, I couldn't imagine going to any prospects at that time not knowing exactly what services I did and didn't provide, because otherwise you're just going to be winging it in those conversations that you're having with prospects. And I think the same applies to MTD. We are recommending that if you haven't spoken to your clients already about MTD, then you need to be. But how can you go into those conversations not knowing exactly how you're going to support them? And I know Z's got lots of strong views, and he's itching to get going on this. But before we unleash Z onto everyone, I just want to run a quick poll to get an idea how much thought everyone on the call has put into the services that they are going to offer under MTD. So if I launch that poll now, hopefully it will come up on your screens. If you don't see that poll in front of you, then next to the questions and chat options in the panel on your screens in the lower right hand corner, you should see an option for polls. So if you click on that, then you'll see the poll. So how clear are you and your team on what services you will and won't provide for MTD for ITSA? So option 1, I've not given it MTD for ITSA much thought, let alone defined any services. Number 2, I have a rough idea in mind, but haven't committed anything to paper. Or number 3, like Z, crystal clear on everything that he's going to support his clients with come MTD, and he's even got his letters of engagement drafted and ready to go.
On that one.
Is that a fair assessment where you're at, Z?
First of all, I'd like to say thank you to you guys for having me here. I really appreciate it, and it's looking forward to the fun that we're going to have going forward. Also, I'd like to do a special thank you for everyone who's joining us, especially from the Surtax family, and another special to the LinkedIn family, which, as everyone knows, have been posting about this event coming up. One of the things these guys, I tried to get them to get the bell because we're ready to rumble on this, and it's quite big what we're going to be debating because there's so many different views, and these are the options that we're going to go through now, and what the pros and cons are. And it really, I think one of the key things Dean mentioned, and it's such a difference maker for me, is be clear in what you're going to offer. Because if you're not clear, then how the client's going to be clear? Because they ain't got the foggiest, let's be honest, right? And as we're going to discuss, and everyone will have a different view, I'm a half full person, so I'm not going to bother talking about HMRC and all the fun and all the alleged savings they're going to have. It's more about what can we offer, how can we make a difference and keep as trusted advisors.
Great. So we've got the results in. Only 3% Z are the same as you, absolutely crystal clear on what they're doing for MTD for ITSA. 28% haven't given it much thought, let alone defined any services. That's very honest of those people. And 69%, the majority, have a rough idea, but certainly haven't committed anything to paper just yet.
Wow, that's quite big, isn't it? And I think the reason being is a lot of people, as our industry, we've had so much changes for what's happened in the last couple of years, and the uncertainty aspect around whether it's going to go ahead. And I think once we get more clarity, and hopefully this conversation that we're going to have, Dean in the blue corner, Z in the red corner, as I put in my LinkedIn post today, about the different views. And there's no right or wrong, it's just what you're going to define and what's right for you and your practice and your clients.
Yeah, but if in doubt, I'm generally right on this.
I think Dean likes to be very confident. I'm going to be nice to him because he provided me some little sandwiches that come in, and I don't want to be kicked out. But as you're going to learn, Z's right, because that's just the way it is, right? But we have the debate. We've got Andy here.
If you're watching this, don't envy me in the middle of this. So let's get started then. So we have tried to boil this down to make this as simple as possible with basically a 4-option choice. Dean, do you want to just run through what those options are at the moment?
Yeah, so we've kind of broken this down into 4 core service options that you can be proposing to your clients. So we had people in the Brains Trust on the day that were saying they're only going to give a full service option. So for those clients that fall within MTD, all that bookkeeping is going to come in-house. All the quarterly submissions is going to be done in-house. And the end of period statements, which is the equivalent of today's supplementary pages for self-employment and land and property, so effectively your end of year accounts. And the final tax declaration, the equivalent of today's tax return, it's all or nothing as far as they were concerned. So that's the full service option. Half service option is basically leaving the bookkeeping external. So if you've got clients that are comfortable doing the bookkeeping or engage their own bookkeeper, then the status quo can remain there. But the quarterly submissions would only be done in-house by the accountant. They wouldn't be unleashing the quarterly submissions regime onto their clients. And again, the end of year routine is done by the accountant. And then the light service, where essentially, if today you're only offering a once a year compliance service for some of your clients, then the suggestion is that will remain as is, and you let your clients do the bookkeeping themselves, let them do the quarterly submissions themselves, and you will come in at the end and tidy up, do the end of year, and sort out whatever state or condition those quarterly
Sorry, did I say that loud? Sorry, boo.
As you can tell, Z is a big fan of the light service option. And then hybrid, if you're not going to hang your hat on one of those for all your clients, then which will you be providing your clients with? Or are you just going to have free reign and let your clients pick whichever one suits them and roll with the punches?
Cool. So we're going to look now. We're going to take each one in order, and it's going. We're not so much comparing them until later on. We want to look at let's take the full service option. There are pros and there are cons, and there are cons. Fans that we are, there are. Let's break that down. So, Z, why the full service?
Well, as you're going to see when we do the poll later, and I'm not counting who's voting who, but I'll be after you if you vote against me. But anyway, the full service, reason why I'm suggesting that this has got to be one of your options is that you're not sitting on your fence. We are supposed to be trusted advisors, guys. I know this gets branded around, but what does that mean? Trusted advisor means that you advise your clients and take initiative because you're the trained professional. Right? It's like following someone who has no knowledge and saying, oh yeah, great, I'll go with that. But that's not the case. You're going to be, because you listened to the webinar today, you're going to be insight, and the full service allows you to cover every aspect. And as many of people on the webinar will know, when you're dealing with clients, their knowledge, especially when it comes to accountancy tax, even if you train them, and we have trained quite a few, is very minimal, and they're likely to cock it up. And Andy did say I'm allowed to say that. So I said it. And the reason why they do that is because there's a mental barrier, because this is something that stresses them out. That's why we are the trusted advisors to advise them. And that's why I think the full service is something that you've got to definitely have on the table. What do you think, Dean, about that?
It's certainly a viable option, and when I think back to the makeup of my client base in practice, I had a broad mix of clients. So there would be clients that we did the bookkeeping for and gave a full service to, but at the same time, I had plenty of clients that didn't want to see me more than once a year, and if they were VAT registered, they would do their own bookkeeping, would file their own VAT returns. And then when I come in to do the end of year accounts, inevitably I would be picking up errors in the VAT returns, but I would do that once a year at that point, let them know of any adjustments they need to make on their next VAT return, do the year end, job's a good one, get the invoice paid, move on to the next job. So although in an ideal world I'd want to have clients that I have a very close relationship with, I also have plenty of clients that I saw once a year and it was perfectly profitable work to be knocking out. So applying that same kind of theory to MTD for ITSA, I don't think I certainly couldn't persuade every client of mine that I'm doing a light service for now to just sign up for a full bookkeeping service. I mean, I don't think they would all pay me when I gave them the price for bookkeeping.
I think you made a really good point there, Dean, and that's why I'm not just hard set on one of the options. I'm going to be doing 2 out of those options, not the whole 4. And the reason being is you're absolutely right. When you do pricing, and this is linked to that, is people go for different options. Some people want the high level service, some want the medium, which is the majority, and some want the low. And most studies that we've looked at for a number of years, and it works because I've just done repricing for a lot of people, is that 20% tend to go for the highest, 60% are in the middle, and there's 20% which people will call them all different names, and we maybe not allowed to say it here, are pain in the backside, let's be honest. So you've got to decide which ones are going to be your clients, because people are going to need your help. There's over 3 million plus taxpayers, according to our friends at HMRC, that are going to be in this boat, sole traders, property entrepreneurs. And as we go through the options, it becomes quite evident why certain options are going to be the right one, and PS, don't sit on the fence.
So if you're taking this on the view of, we do it all and clients are going to be willing to pay, there are going to be ones that don't. And then that means you're running into some quite awkward conversations, and you're running into those conversations with people who you have had that. This is the perennial debate around MTD, but,
yeah.
that is one of the downsides of the full service only option, right?
It is, and that's why you've got to know who your clients are. What is your client? What type of practice are you? What kind of value are you adding? And that's the decision that you've got to make, whether you go with what my recommendations are or Dean's. Ultimately, you've got to make a decision, and you've got to know your client base and make the right decision working with them. But you can't be doing it for free. And that's something very important, because what's happened in our profession is we try to help so many people. So do I. And this is what we, are passionate about. And that's why I said accountant tax advisors are passionate people, because we're passionate at helping. Just because we may not be extroverts, some people might consider me a bit of an extrovert or introvert, it doesn't matter. It matters about what value you drive. And people care about their clients. We consider them part of the family. They come to my office, and many people see LinkedIn, they come and eat food with us. They're nice. My wife even makes them some food. That's why we're a family business. So you've got to have that relationship. You've got to know who you're dealing with and be able to have that conversation with them and make the right decisions as a combination of you and the ultimate end client.
So what would, just give it to us straight, the three top advantages of the full service model in your mind?
I think the full service model, number one, right, you'll be able to add value to the client, and we'll touch base on what type of value you can add in the section later around planning, tax planning. What does that mean? How you can protect the client, i.e. tax investigation insurance. Also, it's done correctly, so you're doing a time saving, taking pain away from them, and time saving for you, because as we know, even when you put detailed instructions on a spreadsheet, they still fill in the wrong cells. I don't care what anybody says. That's what happens when you're trying to get information from clients. Imagine when they're trying to put it in the box in the self-assessment on a regular basis, how wrong are they going to get? And you're going to end up spending a lot of time supporting them without payment, because they're going to phone you up and say, I'm doing this, I'm on this box. And because you put that power position in them, you can't say, sorry, I ain't got time to speak to you. You didn't pay me my premium to do it. That's a difficult conversation.
Right. So it's the full service means that you're ultimately going to save time because you're in control.
Time and pain.
Time and pain.
Time for you, pain for them.
Okay. And Dean, the biggest downside of the full service in your view?
I think it's a big resourcing headache waiting to happen. So when I did start offering my clients a bookkeeping service, rather than bring that in-house, because I didn't have a team of full-time bookkeepers that could take on that work, I would be looking for independent bookkeepers that I knew were good, and I'd be recommending those to my clients that wanted bookkeeping service, because I know that the records that I'm going to get back from that bookkeeper is going to be really good, and that just saves me time for the other work that I do where I can add the value. Problem is, when you find a decent bookkeeper, they get super busy super quickly because you're giving them referrals, and then they're maxed out. So then you're looking for another bookkeeper and another bookkeeper. What is going to happen come April 24 when suddenly everybody that perhaps didn't do bookkeeping to that level suddenly realises they do? Everybody's looking for a bookkeeper. Everyone's looking for bookkeeping services. If you think it's hard to recruit people now, what's the situation going to be like come April 24?
Perhaps the advice should be just get into bookkeeping. Get straight into just pure
argument. Can I count? Really good point, Dean. And that is the problem in my industry, recruitment right now. How do you counteract? You have an offshore and onshore team. You get your liaison partner onshore, and offshore you recruit direct. Power of LinkedIn. People come out to you and you can educate and train them to cut down your time efficiency. Therefore, the job becomes profitable, and you still keep the quality because you've got a review service rather than the doing. That's how you deal with practice efficiency, in my opinion.
Okay, right. A thorough going over of the full service option now. So let's take a look at the half service option. So this is significantly different. We're talking about you're leaving the bookkeeping with the client. They're doing the actual bookkeeping, but you are still maintaining the quarterly submissions and the final wrap up. So Dean, why wouldn't you want to do that? What's on the downside of that?
Why are you always including me as the negative guy? Why do I get the negative one? What don't I like about that option? I don't think it's a bad option. I don't think for starters. So the client is doing the bookkeeping themselves. You're just taking that information, checking it over and doing the quarterly submission. I certainly had plenty of clients from a VAT perspective that would do their own bookkeeping. They'd send it to me, I'd check it over, and I would be the one submitting those figures for VAT. I think it's a perfectly sensible approach. I suppose the problem from an ITSA perspective is all the chasing that's going to come along with that, because you're going to go from having, depending on the size of your practice, I probably had maybe 15 to 20 clients that were in that position from a VAT perspective. I think I'd probably have 3 or 4 times that from an ITSA perspective. Again, it's a resourcing issue. How do I handle all those reminders, all that chasing of information? Can I really charge a decent amount just for taking the figures the client have prepared, casting my professional eye over them and submitting the figures? It might be a little harder to justify. But I'm not against the option.
Okay, and Z, you're quite a fan of this one, right?
I think this is my preferred option, to be honest. This is how we work with a lot of clients already, and many practices will be working. I think Dean makes some great points there already, but we already do that for VAT returns. And I see this as the same service as how we do for VAT reviews, and everyone charges a selective price on VAT reviews. If we can get the information in the right way, made for the end client, and this is where I've been challenging TaxCalc to develop an import function that we can have a template in Excel that the client can fill in and they're a bit more familiar and easier to understand, and then you can use that to import in if you do your adjustments. Also, the benefits of doing that is we can then forecast and plan based on this. What is actually happening? We get the quarter in, we know what's going on, you get them part of the journey so you can reduce the cost because they don't have to pay the bookkeeping, but you're still adding value because they will not know the tax treatment. They don't know mortgage interest, how you treat that. Most accountants are struggling still with that because it's not straightforward. There's loads of different ways, different implications, whether it's in the personal allowance, without getting technical and boring any non-accountant on the webinar. So there is a lot of aspects, and you can add value, I believe. It's all about communication. When you price or anything else, the price is got to be reflected to the value. If the value is higher than the price, then people will value it because they can feel the pain saving and the benefit of tax planning, and we'll get onto that later.
Yeah, I think you make a really good point actually about the things to look out for in those records that come in because clients just don't know the rules. I think also we don't yet know to what standard HMRC are expecting the information that's going to come in quarterly. So how much checking and putting things in the right places and sorting out capital from revenue, how much of that are they expecting us to do on a quarterly basis for what they constantly remind us is an update, not a tax return? I don't know.
I think, Dean, another great point there. And everyone's ready for a punch-up, but Dean's making so many good points. I can't even have a punch-up with him because he's making such good points on it. The reason why I think it's going to be really difficult for him, because we even not talked about another area we were talking before, is about foreign income, especially foreign property, furnished holiday lets in Europe in the EA area, service accommodation. They have different rules. So we've got to, we can't make clients tax advisors overnight, can we? So you've got to get that balance right and really be able to see how can you streamline it that you make a margin, because ultimately the client deep down, they want you to be there, don't want you dying of a heart attack, or they want you to go out of business because you're not making no money. So there's got to be a compromise and a win-win for everybody, in my opinion.
Yeah, I think the deadline, well, the short turnaround time that you've got to file these quarterly updates is going to be an issue as well. Because if you're relying on the client to do the bookkeeping and you've got a 1 month turnaround for the filing, they'll see the filing as your responsibility to get that in on time, but you are completely reliant on them getting the bookkeeping to you in a good enough state within a month, and leave you enough time, in amongst all your other clients are in exactly the same position, to review all that bookkeeping, get to the final figures, get them to approve them, get them submitted, which for VAT is probably lesser numbers, but also you've got the stagger with VAT and you've got different people on different VAT staggers filing each quarter. Under MTD, everybody is effectively on the same stagger.
Another some great points, but I think it's how you plan your practice and efficiency is putting reminders in from timelines. You've got 1 month, 7 days, so that's going to be done at that start of the month. It always ends up happening that way because of clients, but this will have to be done the week before the end of the month, where you've got to start filing and you're going to have to train the clients. It's not us as accountant tax advisors making these decisions. It's HMRC, and we've got to abide by those. Unfortunately, the client's going to get a fine otherwise. We've got to stop them. As soon as they start getting fines, do you think they're going to start following the rules or not? Yeah, because it costs a bit of money, doesn't it? And that happens with corporation tax at the moment, company house submissions, as well as corporation tax returns. We've got to train them and start the education now. And hopefully you can use the knowledge that we're sharing with you guys to help progress that going forward.
Yeah, and that is a very good point. We discussed the issue of client communications in the previous webinar that we did with Ariana, and as a result of that, we are working to try and develop some template letters, which can be deployed at different times throughout the next 12 months to inform your client in a way that's actually going to get noticed. So that is something we're working on. And if you guys who are helping me with that are watching, thank you very much. So, okay, so we've looked at the full service, we've looked at the half service option, the light service. Now, it has detractors and it has kind of more fans. And I know that I've spoken to a number of practices who are looking at going down the light service option. So just to remind you, that is, you're going to give all the bookkeeping and the quarterly submission responsibility over to your client, fingers crossed. And you are just simply going to maintain a relatively status quo situation where you're just doing the end of year statements. So I haven't missed anything there, have I, Dean? That's broadly where we're going.
Covered that.
So, Z, what are the advantages of that approach?
I think that's going to go to Dean.
No, I want to go to
Dean's got to give the advantages of this. I'll be honest with you. I'm going to tell you. I'll start with the negative parts from this. I've been very positive with the other options. I personally think that's a car crash. If anyone on this hasn't dealt with many clients and they're just starting their practice, you'll soon learn, like the rest of us, what happens in this scenario. Have you got any clients that submit a self-assessment and look at what happens? Right? We even have some people in the profession who struggle with that, who've done some training, where people have done no training. You're asking them to submit. And we know what HMRC's long-term game is. And sorry if HMRC, you're listening to this, I've been positive up to date. This is the bit where I'm not going to be so... what's going to end up happening, they're going to have 4 returns, they're going to look at the 5th one, the end of period, and they're going to say, this looks total garbage. This ain't the same. Right, you're on the firing line. Right. Tax accountant, tax way. I've got this letter from HMRC, deal with it. You're like, oh, submitted it. Sorry, but you're not covered under insurance, just like the self-employment scheme that went just a little while back, which they did themselves, and you know what happened there. I had a few tax investigations to defend on that. That's what's going to end up happening, in my opinion. So if you leave it, you're leaving yourself to the mercy. I'm not disputing there's processing only practices out there. They will have a different business model, but for me, I think this is a car crash, and I really think if you do this, you're losing your position as a trusted advisor, and you're nuts in the nicest possible way. Over to Dean, who with the positive side on this.
Did he just call me nuts, Andy?
I think he may well have done, yeah.
Yeah, the more Z describes that light service to me, the more I'm convinced that is the right way to go. I think when I try and look for the opportunities that MTD, for instance, is going to bring, I always think where there's muck, there's brass. And if clients are going to be submitting their own quarterly submissions, there's going to be a lot of muck there.
Right.
And putting my auditor's hat on, that probably only will for like 9 months of my entire career. But no one wants an audit, right? No client sees the benefit of an audit. So your whole objective when you're doing an audit is to find that one thing that can justify that whole audit by finding something that's wrong. Yeah. Now, if clients are filing their own quarterly submissions, I'm going to be finding these issues all over the place, and then I can present them to my client and say, look, I know you didn't want to pay me to do the bookkeeping and everything in-house. I know you didn't want me to pay me to be doing the checks every 3 months and make the submission, but look, you're making all these mistakes left, right and centre. I'm going to have to sort these all out for you, but don't worry, that's what I'm here for. I can sort all this out for you, and here's my increased bill for sorting that out for you. Plus, I kind of liked, yes, I liked clients that you build that close working relationship with, the ones that saw the value in what you do and are willing to pay for it, and you can genuinely contribute to their business every month, every quarter. I had a lot of clients who there was nothing really that I could offer of value over and above keeping them on the right side of the law. And actually, for quite a lot of those clients, they were just as happy to only see me once a year as I was to see them once a year. I knock out the job in one go. There's no picking up job, putting it down, picking up one quarter, checking what you've done the previous quarter. The records, you filed last quarter, but the records come in and you can see that on the bookkeeping records they've provided, the last quarter's changed. So I've got to go back and check what's changed here. Do I have to include the adjustment this quarter, next quarter, at the year end? It kind of absolves you of all that.
So, I mean...
Can I come back on that?
Yes, please.
Right. So, Dean, you just agreed with my argument. And everyone's heard it here. You just said you're going to use this way to get to a half full or full service. And that's your long-term objective. I actually agree with that strategy because that means I win by default, right? But that's the first point. The second point, which is quite important here, how are you going to charge them to do a cleanup for this? It's really quite hard. I find this for year-end accountants, with year-end accounts when we do for clients where they've done the books, we've had to put a review of bookkeeping charge in. Some clients are not liked it, but we've had to do that. So therefore, you're going to end up charging them for making mistakes. And if you want to wind up people, that is the bit that really winds them up, because they're saying, not only are you telling me we're stupid, but now you're charging us because we're stupid, right? And that gets them really going. And then you're going to say, oh yeah, by the way, that tax investigation, I'm going to have to charge you £150, £200 per hour to do it. And by the way, the insurance that I said, it doesn't cover that because you cocked it up, not anybody else. So I think that's a bit of a dangerous strategy for me. And I think by putting that trust in the client, I don't think that's persuasive, and I think in the longer term that will give you more headaches and heart attacks, in my opinion, because we know what's going to happen. You might have 100%, you might have literally less than 5% of clients that can actually do it after a lot of training. The rest of them, they're not going to understand the difference between cash accounting, invoice-based accounting, which is the difference between furnished holiday lets and property rentals, which are done totally different. One's abroad. Oh yeah, you can't accrue tax. What? Where do I get these numbers from? How are they going to know all of this? And how are you going to be able to explain them without making them accountants in their process? And I think that's the only way this service can work, in my opinion.
So I don't know if anyone watching was going down that route, and we'll be exploring this later. But if you've been we're looking down that route, have you been swayed by Z's arguments or by Dean's arguments for the light service? But I want to move on because I think this is probably the most interesting one, and this is the hybrid offering. And by that, a lot of the people that I've spoken to and a lot of people that were actually contributing to the Simple Step guide were of the view that, well, I've got some clients for whom the full service is the natural option, and for whom the light service is the option. And at first glance, it seemed like a really useful mechanism of just combining these. But for me, you're not really making a decision. And I think the most point that we wanted to make in this is that it's going to be really useful if you make one of these choices and stick to it for all of your clients. Because if you go down the hybrid route, you've still got a mess to deal with. Z, what are your thoughts?
I think obviously the referee in this case has actually helped with the argument, because he understands from talking to myself and Dean, who've had a lot of chat about this, the implications of not making a decision is a lot worse. And the reason being is, how do you structure your practice without knowing what you're going to do? Because you have to resource up, which Dean made a really good point earlier from his experience when he was running his practice, is that if you don't know what services that you're going to go for, you can't. Few things you're going to affect it. One, you can't resource. Second, your positioning, marketing. No one knows what you're doing. And believe it or not, being for everybody means that you are for nobody. And that is so true. That's why we specialize in a certain area, or we know what our client personas, without getting to a marketing lesson, what they are. And you have to be very clear of what you provide to your client base, because if you're not, then how do you think they're going to attract and what they're going to expect from you? Right? Because when someone turns up, they need to know what value you're going to create. They've got to be really clear. And if they're not clear, you're just going to waste your time talking to people that are not interested in your services, first of all. Number two, waste your time with people that are just going to cause you havoc, and you're not going to be able to plan the infrastructure, i.e. staffing, and you're probably going to end up having a lot of stressed out staff, which which you definitely don't want? I don't know, Dean. I think we're probably a bit similar in some of the stuff.
I think we are. I mean, kind of all joking aside, how we have different views on certain things, I think we'd probably come up with a broadly similar result in that we'll go for a hybrid service offering that works for the clients that it's most suitable for. I think, so we certainly had at least one member of our Brains Trust that is going for the full service option only, and that is because irrespective of MTD, she has geared up her practice to specialise in bringing everybody onto the single digital bookkeeping system that she prefers, knowing that she can roll out additional services on the back of that information that she's processing within the firm. So irrespective of MTD coming in or not, that's the type of client she's focused on, and that will absolutely work for her. So I think it's a decision everyone's going to have to look at their own client base and decide, if I still want to service the same type of clients that I'm servicing today, which of these options are they going to need, which are going to suit them? And then you can make the decision of whether you're going to continue to service exactly the same types of clients, or whether you think, you know what, I can't support one or other of these items. I'm naturally going to lose some clients that I don't support, but I'm also going to be gaining the clients that are looking for the services that I do provide. Because like you say, if you don't set out your stall and say what your specialism is and who the types of clients you're looking to support, then you're just leaving it to chance, not really helping anybody, and you end up being beholden to your clients who all want different things from you.
I think, Dean, you raised some amazing points, because that is the problem with not being a clear strategy. And I know we're having our debates, and one thing I think we're quite similar is being very clear in what you offer. The other problem you're going to have is you're going to have to train these guys. Anyone who's done training on cloud software, as everyone knows, I'm a big fan of a certain type of software called Xero for bookkeeping. And what the challenge we have is trying to train the guys to be able to, or ladies, to be able to do the work on there. You're going to now have to train, and we use TaxCalc. I'm a big fan of that for our year-end aspects. And if we then have to train them on another software, the pain, first of all, getting payment for the training. Secondly, the support training post that, and all the queries that you get. You can't price for all of these, and that's what you're opening yourself up for if you don't take this approach. Because what will happen at the end output is, when you come to the fifth return, the end of period return, they're going to say, well, why is it not right? You know, you're going to say, well, you've done 4 and I just done 1, and I did what was the right thing. And that's where the disconnect is, isn't it?
What about the implications of trying to run the hybrid service and having, you know, for argument's sake, a third of your clients doing full service, a third of them doing the light service, in terms of the organisation of, you know, you get the efficiencies of scale in that you deal with every client in the same way. If you start having different clients coming in and potentially moving between those levels of service, that is going to be a nightmare, isn't it?
I mean, you could make a good point actually about the clients that, move between the different service levels. So perhaps they're
you do them the audit. They move from from light service to full service because of your audit. Yeah.
I mean, I what can you say? This whole thing is a resourcing issue for me.
I think there's one solution, Dean. I think we're probably not thinking about is technology, right? And part of this is where this conversation is starting from. One of the ways to do this more efficiently is, how do you train people or communicate in a scaled way. And one of the best ways is to do webinars like we're doing right now, and doing that for your clients. So getting a Zoom or whatever technology you use, getting a session in and investing time in doing that. Because if you can do that for all your clients and have a slot to fit in and explaining all this stuff, you will get feedback from them to help you make the decision. If you're a bit worried and you're like, it's a bit to the point there, you know, really, is he going to be able to do that? Yeah, I'm going to do that, but that may not be right for you. So how you're going to have to do is, if you're not sitting on the fence and you want to make a decision, scale it by getting feedback from your clients. do the initial training or update, use the webinar that we've done. So you give a social proofing that is a headache. It's not just made up by you to get more money out of them. And then basically you put the foundations, then you scale and communicate to them. And that's going to help get your position across and give you some answers on your client base, which is unique to your practice.
Excellent. Right. Well, thank you very much, gentlemen, for the very thorough overview of these. Now, before we move on, I do want to leave time because we've got some great questions coming in. Some of these are going to reignite this whole debate again, so get ready for that. But we did want to bring up the issue, some of these other issues about additional services and the changes that are going to be made. But before that, we have, just having heard what you've heard, we did want to ask you one more question. So, Dean, you want to bring up the poll?
Before Dean starts, crunch time, guys. This is the decision that I've been talking about LinkedIn. You know who's won this argument.
I believe there's money riding on this. So, yes.
So,
Monies or forfeits, one of those two.
So I've made the poll live, so either that will have popped up on your screen. If not, go to the little polls option on the bottom right of your browser. Of these options that we've presented to you today for the core service offering on MTD for ITSA, which do you think you're most likely to go for? So are you with Z, that you are going for full service or half service, i.e. you are going to be doing the quarterly reports, whether you're doing the bookkeeping or not. You're not going to let your clients just merrily go off and do their own quarterly reports.
Just going to do thumbs up, guys, so you can see me. I don't know, you can see my thumbs up. Sorry.
Are you going to go for the sensible option, which is tailor your services to suit your clients, so offer the full range of hybrid services, or are you going to be a bit more strict like Andy and it's your way or the highway? You are going to nail your hat on one of those three core options and nothing else.
I don't know why I got landed with that one, but
don't know. Or if you need more time to decide, then that is an option.
Is that the sit on the fence option, number D?
I'm just going to hammer lots of votes onto my
No
one.
sit on the fence. Come on. You know, there's a lot of riding on
no
this.
fence sitting in this.
Okay, well, I don't want to disappoint our guest as he's very kindly come along and joined us today. But with a huge majority of 45% to 37%, people are with me.
45? Let me look at that. That's rigged. Let me look at this. Is that actually happened?
That's actually happened. 45% fully agree with me as the only sensible choice for their practice.
45, 37.
In that they will offer all options depending on the client.
I'm in shock.
A surprisingly high number of 37% aren't going to let their clients loose on their own quarterly submissions, so they're with UZ. 12%,
the wise ones.
12% need more time to decide, and not unexpected that very few people align with Andy.
The full service only. I was saddled with that option. Okay, awesome. Thank you very much for that. So let's just move on, because I'd say we've got perhaps just shy of 20 minutes left. So I did want to look at the other services that we discussed this quite a lot when we were in the session. Is what else is this going to potentially mean you can offer? What are your clients going to potentially need? So, Z, you had some really interesting points to make. So just run us through what you see as like the three key areas.
I think when we were discussing, and Dean come up with some fantastic things as well. So hopefully I'm not taking the full credit, because both of us came up with these. And there was some amazing conversations when you start collaborating across your profession with different ideas. One of the bits was tax investigation insurance, we discussed before. If the client does it themselves and submits it and HMRC investigate post that, then the tax investigation insurance will not be valid. So you're going to have to change your proposition if you're going to start doing that. So the 45%. Right, app advisory and training. I think we were touching on this. If you're going for different options, the training side is something that you're going to have to invest time in, and how you combine all the different apps. Because if you're doing different for bookkeeping, different year end, and how you're going to get the information in, you're going to have to see how they work together, how you speak to your clients, depending on what they go for. Once again, that 45%, a lot of work coming up, guys. You won't get out of it by not doing it, because you're going to have to explain to them how all this works. And either they pay for it, and you're sort of getting an upfront payment, and they will not be happy if they then have to get you to do it, because they're going to end up paying double. The other bit was, for me, the other bits I wanted to touch is foreign property retouch. Property is quite a big thing in this because, as you guys will know, it's a combination of sole trader income and property income. If it's over 10 grand, the combined, you've got to do one of these or go through the process. This is going to add a lot of complications, and if you're not being the trusted advisor, and I mentioned this before and it's a bit of a cliche, is how are you advising them? Because if you do different sequences of this and how you structure their income, are you doing tax planning, therefore they're getting a return on their investment and therefore they will pay you if they get saving, you're losing this ability by doing different options. And that's one of the biggest things I want to get through over to people is if you're doing home office agreements, loan interest agreements, you've got to be able to structure those through the new MTD format. How you're going to extract the income for the client. You've got to think about that because that's going to affect their taxable income. Foreign income, which I think we spent a bit of time on, and I hope we got a bit of time on this, guys, because I'm quite passionate about this. I know Andy and Dean were really keen to get a bit more of my thoughts on this. When you do, we've got clients in Canada, Europe, they have different accounting periods. And as many will know, and they can go and check on this if they want to, is that the income you can't accrue for tax. So if there's a calendar year and it's not April to April like it is in the UK, you can only forecast the actual income and costs, and then you have to do an amended self-assessment. How does that work through? The other thing is the cost that we won't know from the mortgage provider. We're going to have to go on an assumption or forecast because get a mortgage statement from your mortgage provider during the year. Good luck with that because you're going to have to do an assumption on that and work out what the interest implications. The reason why the interest is quite severe in this case, depending on the rest of their income they're earning, it changes the tax position. Because the interest is done below the line, like a tax reducer, depending on the income. And anyone who's from a bit of a tax knowledge, they understand what I mean. It's not done against the gross like it used to. So when you add your incomes together, you're going to come to a wrong answer, and an average person will not be able to do this. This is where you can step in as the trusted advisor, saying, look, we're not just providing compliance that you're putting the numbers in, we're adding value, we're protecting you by keeping your insurance. So if HMRC turn up like they did with the self-employment grant, you're protected, we will deal with it with the tax investigation insurance. You're planning with them, you're saving them money on a quarterly basis. Is your relationship going to get better when you speak to your client regularly or once a year? And that is the difference. This is an opportunity, guys. Don't think of it any other ways. It's an opportunity to look at it half full, not half empty. Don't sit on the fence. Utilize it. Explain to the client how you're going to help their tax planning. Read up about it if you're not sure about the tax aspect around this, because people don't pay for accounting. They pay for savings that's linked to tax. That's my experience.
Yeah, I mean, I love it when Z talks about property taxes because it's obviously a specialism and it always highlights new things in my mind, and always learn something new when I speak to Z. But I had clients that had property, but I was never a property tax expert. And so when I was thinking, what are the problems for property clients? It was the fact that they didn't really see it as a business. They didn't keep regular records like a trading business would do. You'd have the issue of them receiving rents net, where letting agents have taken their fees and any other kind of expenses that they've paid for on behalf of the property owner. I didn't go as far as thinking of all the other issues that come into play that Z mentions, and actually even whether they fall into ITSA or not comes into play with the things like the home office agreements. That's rental income for effectively your standard shareholder directors that you're putting them in.
You get finance restriction on that. I think the other thing, sorry, interrupting you in your flow, furnished holiday lets. These are also different as well because they're not done on cash accounting, guys. They're based on invoice, and they have capital allowances aspects as well, where you can claim stuff that you can't do with property. Imagine when they're in Europe, i.e. in the EEA, currently you can still claim as furnished holiday lets. And then you've got, as I said, the ones outside the EEA, Europe. So there's a lot of different sources of income, and I think this is where HMRC, if they are watching, obviously they should be, tax calc, got to be watching this. This is where if we can add insight, because ultimately as a collective, one of the key things we're trying to do is help our profession, which is the trusted advisor. I'm biased. I will say I'm biased because I tell every client the number one relationship is with your accountant tax advisor, and it should be, because you're your financial health doctor. That's what you are. If you look at my LinkedIn, I was going about, of course, I was life tour guides, because we're the people that can help clients to get financial freedom by structuring their incomes, all the different sources. Sorry, Dean, I interrupted him.
No, it's really insightful. And actually, you're bringing up the fee protection insurance or tax investigation insurance. That's something, again, that I hadn't considered, but I know for a fact that HMRC's data scientists are rubbing their hands with glee at the prospect of having all this data to analyse and play with probably no comprehension of the accuracy of that information that they're going to receive. So you've got to think they're going to be retraining all their algorithms as to what's going to pop up a potential investigation. Is the makeup of your client base, like you say, if the 4 quarters are wildly different from the end of the year, which I think for the majority of my clients it'd be wildly different unless I really do go in every quarter and start doing accruals and all kinds of provisions and things. Is that going to mean I'm going to see a lot more aspect inquiries as a result of that? In my practice, I started off with the client side for my tax investigation insurance. I then went to full practice cover. And actually what I did, once I had the full practice cover, because it's I wasn't reselling the insurance, I was providing a service, a fee protection service to my clients, and it was my practice that was completely covered, whether the clients were aware or not. I proposed different levels of protection for clients, so I could offer them just a protection for your personal tax, or protection for your personal tax and your corporation tax. I'd probably look at that again now and package up some MTD for ITSA service, because how I package that up to my clients as a service is entirely down to me if I've got the full practice cover and everyone is going to be covered. So lots of different things come into play that you've brought up that hadn't even occurred to me. That if you haven't thought about these are the things that you need to think about and have in place before we go live.
Can I just mention a couple of things, if we've got couple of minutes, just on the sole trader, because we've neglected the sole traders, and if there's anyone watching, they're like, what, shouting at us because we've not talked about sole traders. I want to spend a bit of time. Dean did a great video which I watched and learnt so much from about tax base periods. Area that everyone puts their head down because they don't want to deal with it. I've got some clients that are affected because the sole trader is obviously going to be quite a big one from a trading business perspective, because you're going to have to structure that income on top of anything else, and then the hierarchy of the income. So there is a lot of variations, because a lot of people with sole trader, they jock up, because currently you can register October 5th the year after. That's probably going to change, and they're going to have to change the base periods, which, as I said, you did a great video on. So there's a lot to think about. So quicker you guys start talking to your clients, you can utilize the webinar. I know TaxCalc are going to be sharing it as a base period, base information. It's going to be a difference maker. Sorry, Andy.
Not at all. Thank you very, very much, and thank you, Z. So now you know this is why you tune in to TaxCalc TV. You learn so much, and we're learning while we're doing it. So thank you very much for that. I did want to leave some time for some questions. We do have a few minutes. There was a couple that sparked out to me. So there was a question about whether how to get hold of the MTD Readiness Guide. We will be circulating that alongside, or you can go to this URL to pick that up, but we will be circulating an issue as well when we send out the video. That won't be immediately after this event, that we will be following up in a couple of days with a polished version of this. So I didn't want to reignite the whole debate, but I'm going to. So the question came in fairly early on in our session, which was a statement from Mr. Baker that the full service is a good option, but only if you have the resources to undertake all the extra work. I do not have the resources, so it may be that I have to let clients go as I cannot service them. So it's really just a counter to the pro full service argument.
I think on that point we sort of touched that when Dean was making the argument. You've got to start thinking differently how you structure your service. I've been quite a traditional person, having some people in the UK, but how the environment has changed, and everyone knows the productivity has changed without being controversial about working from home and the lack of productivity or the lack of people wanting to do work post Brexit and COVID. You've got to change your ideas, and I've had to change my ideas on this, is having a combination and trying to think, how can you get good people offshore as well as onshore, utilize the technology, put good processes in place, systemize your practice, and therefore you can then be able to carry on and don't have to cut those clients, because it will make you still profit and you'll be able to service them. That's my advice on that.
Yeah, there's a couple of good questions come in that I'd be interested in Z's opinion on these, around VAT actually.
Fun area.
So it's not a VAT technical question. Don't panic.
Not bad under that.
But do you think, given that we know that ITSA quarters are prescribed, there's no stagger, do you think that you should align the VAT quarters to match those ITSA quarters, effectively putting all your clients on the same VAT 1 stagger? So if they're VAT registered and you're not in that.
That is a fantastic question. Sorry, who asked that question?
Jill Broderick asks that question.
Fantastic question, Jill. I wouldn't, and I'll explain to you why. Because otherwise you're going to have a lot of work for the March, June, etc. period. You don't want that. Yes, there will be some pain in those periods, and we already have it where you had European aspects, because European had to be done on a quarterly calendar month basis. So you've got to start thinking about it a bit differently. I wouldn't personally. I would try to keep my process separately. I would try to get more VAT periods not lined up to a quarterly aspect, because I've tried to line them up to year end for a reason, because that helps my year end accounting, and I tend to advise clients to have that done, and that also helps us as in practice to be able to manage workflow, because otherwise you're going to be, for a few months you're not going to be able to do anything, and you're not going to be able to get the information early, are you?
Yeah, and unsurprisingly I would do the exact opposite of Z, and I would align my quarters so that you're not picking up and putting down the records on one quarter, then a month later doing the next one, then wait 2 months, then do the other one. I feel like there's a bit of efficiency saving to be made by, even though you've got to make the submission separately, so the VAT submission is separate to the ITSA submission. If you can glean it from the same data at the same time, I think maybe there's a bit of efficiency saving there, even though it is going to give you a spike. But you make a good point about aligning it with year end. So if you're not in a coterminous year end, so if you're not a March or December year end, then yeah, maybe you wouldn't, because it can be easier to align the VAT periods with your year end. Although I was taught in my first job that actually, I wasn't taught, the practice I worked at intentionally made the VAT periods not match the year end, because they didn't want HMRC to look at the total sales for the 4 quarters and see if it ties up with the turnover that's reported in the accounts.
I think the other challenge, and I think you make some fantastic points, there is that point. I think the basis tends to be different, because most businesses we base this on accrual basis, whereas when you look at income for self-assessment, it tends to be on a cash base for a majority of the categories. So you're not comparing apples to apples here. So I can't see where the efficiency saving necessarily will come from, because they're on different bases. That's my view on what I've seen. I don't know, Dean, because it's not this. It's changed over the years. I know there's some businesses for sole trader that are on cash, but the benefits of doing cash bases are not great for sole trader trading businesses. So I wouldn't really want to line those up, because you're just causing yourself problems, because you're not really going to get the efficiency savings.
Yeah, I always found that clients that had come to me having done their own tax returns for a period of time, they were using the cash basis because it's easier for them. They don't need to understand accruals. But then as soon as they come to me, I'm like, okay, we need to stop this, because you're missing out on a whole load of tax relief for doing it. Yeah, we have one more question actually on the kind of that side of things. So VAT clients are saying to me that I do the quarterly VAT return, so there should be no extra work doing the MTD returns. How do I address that with clients?
Sorry, who's that?
Patrick.
Patrick, you're famous now, Patrick. That's a fantastic question. That's about positioning. We've just explained what the difference is between VAT and what the difference between income tax is. They're done on different bases. So if you're talking about sole traders, generally you'll be doing invoice bases for your sole traders because of the tax reliefs, as Dean mentioned, around interest and a few other areas, putting your accountancy fees and all the rest through to attack their tax position, whereas VAT for most businesses up to 1.6 million is on a cash basis, and they are different, very different. So you just can explain to people you're doing on a different basis for a reason, which is the benefit. brush up on that, articulate that to the client. You've done your position, and therefore you can charge value for that because you are adding value, in my opinion.
Great. There is one question actually I do want to address. I know we're getting very short on time now. We've had a question, will TaxCalc have a system where we can upload a bank CSV file and send the tax return that way? In short, yes, we do. We have a product Business Filer. So if you're an existing TaxCalc customer and you go to your TaxCalc dashboard, you've probably seen for quite some time now, we have Business Filer as an option. And that if you click on there, it takes you to our website and gives you some more information on Business Filer. We are going to demonstrate, we're going to disseminate some more information on exactly what Business Filer looks like, because we have built and developed it. It's just not for general release because MTD for it isn't quite there. But essentially, it's a tool for ingesting spreadsheet information, whether it's Excel or CSV, so that either you or your clients can make those quarterly submissions. All the end of your period statements, end of your tax declaration, that'll all be done in TaxCalc's tax return production, just as your self-assessment tax return is done today. But yes, we absolutely have a tool to ingest the data from a spreadsheet and make those quarterly submissions.
Dean, can I add to that? And I'm going to add a bit of pressure onto TaxCalc here because a lot of people have been asking me. Two things we really would love to get from TaxCalc, and this is the point where a bit of feedback is. Number one, import for property and things like this into TaxCalc. And number two, as everyone knows, I'm a big fan for bookkeeping, for Vizero, how we integrate the software to TaxCalc so we can keep our stack of how we do stuff and how we built our practice and efficiencies. And that, for me, a lot of the people from Surtax, the Surtax family and LinkedIn have messaged me and said, Z, can you please raise this with TaxCalc? We love the software. We're huge fans. Hopefully get a bit of swag. We're huge fans of that. But can we please integrate this, because we love the different things for different things that they do, and how can we keep on working together, because we know what best in class here is, what best in class is here, and this is how we've talked to our clients, and we don't want to change the whole world but just change a bit of it.
I really hate to do this, but we have completely run out of time. We have filled our hour more than overfull. There are a number of questions there which we haven't had a chance to get to. Some of them I was really hoping to. Rangith, you ask about workshops. I'm not exactly sure what kind of workshops that you want, but I will reach out to you after this. And but yeah, we are very much open to input from anyone watching. If you've got suggestions or requests that you want us to cover, please do send those in. We've got 2 webinars coming up. On the 23rd of June, we're going to be looking at the use of our practice management suite and best practice to accelerate the processes within your firm. So whether you're a current user of any of our practice management tools, or you're simply considering them, that's worth a look. That's going to be on the 23rd of June, and that's going to be with Martin Davey, who's the product director for the practice management suite. Dean and I will be back on the currently stated for the 4th of July, where we're going to be taking a look at customer client segmentation in the from the perspective of MTD, which is the next of the MTD Simple Step strategies as we've outlined. So really, I just want to say thank you very much, Z. It's been fascinating. It's been really fun too. Thank you so much. And thank you once again, Dean. We will hopefully see you soon. And until then, I wish you all the very best.